This is another stock that Anna and I analyzed in great detail in the stock trading and investing program. And the stock in this case is one called CARG Gurus and falls into the category of fallen angels. All stocks, we created something called the stock clock, which looks at all the various different types of stock and how their DNA really is explained in terms of the characteristics of the behavior of such stocks. And as I say, this one fell into the category of a fallen angel, trading at quite a high price. And as you can see, we've gone all the way down here to around $12, $12.40. In fact, we went a little bit lower here. We even went down sub into the single figures, down at $9. Very well-known company. You may have come across them online in the motor trade. What I wanted to highlight here are again some very simple VPA lessons that you can take away. Multiple time frames are an essential component of any analysis, certainly from a technical perspective, and the fundamental analysis is equally important. And when I talk about fundamentals, I'm not just talking about the broad country and sentiment of fundamentals. I'm talking about the stock fundamentals itself. In other words, looking at the balance sheet, the cash flow, P&L, ratio analysis, and how that stock aligns with its competitors within the same sector from a financial perspective. Because you can have a great looking technical chart but awful fundamentals. Vice versa, you can have great fundamentals but a terrible looking technical chart. So it's always important, as we explain in the program in great detail, to consider the technical, the fundamentals of the stock, the fundamentals obviously of the economic landscape, and also of course the related aspects, relational aspects of market behavior and sentiment. We start with the monthly again, and I think the thing that really jumps off the chart at me at any rate is our eye is always drawn to extremes, extreme low, extreme high, very widespread candles, very narrow spread candles. And the one that I wanted to highlight here is really this candle. In this case, the stock has rallied dramatically. We have the widest spread price action on the chart itself. But look at the volume associated with that candle. That is a trap move. Clearly what is happening is the market makers have marked the price higher and higher and higher. We've had this rally. We've had a little bit of a reversal. Investors are looking at this as a potential cheap stock to buy, and up we go, and they are expecting higher and higher prices, possibly to go up $50, $60 as it was prior. But when you look at the volume associated with the monthly time frame, it's low. It's well below what you would expect for such an explosive move in price. It's anomalous. It has to be anomalous. And therefore, it's a big, big red flag. There is something not right here. Price and volume are in disagreement. It's anomalous. The volume for such a dramatic move would have to be up here, probably well above that level even, probably up here somewhere. And it isn't. It's down here. So what does that tell us? Very simple conclusion. The market makers are not participating. They are simply marking the price up. They know where they're taking the campaign, and it's not to the upside. It's going to be to the downside. And indeed, that's what we see, which is why it's so important to look at multiple time frames. You may well be looking at the weekly, you may well be looking at the daily. If you're not looking at the monthly and not seeing that, then you might start wondering, well, why is this stock reversing? You might think first we get a reversal, down it comes, you think, how far is this going to go? This is an absolute clear signal of what to expect. The converse of that is really this candle and volume relationship, where, if you like, as I say, we have the reverse anomaly and a positive anomaly, because We've seen the selling coming off here. We've come all the way down from $50 odd and we're now down almost into single figures. So a huge reversal in sentiment. We've got earnings releases in amongst here. Nice thing with trading viewers, you always know where your earnings are because they always come up with this little E, which is great. Wonderful feature of the chart. And we get this high volume, highest volume on the period, as we can see, highest volume on this particular chart. And we've got a nice wick to the lower body, and we've got a little down candle in terms of the body itself. It doesn't matter whether this is red or whether it's green. The fact of the matter is we have seen huge price compression. We've seen a massive uptick in volume, which means this is the point at which the market makers are stepping back in. They are buying, because if they were not buying, this candle would be down here somewhere of that sort of volume, but it isn't. It's compressed, it's very narrow, and we've got a nice wick to the lower body. It's telling us instantly in a very positive way, expect to see at the very least, this is stopping volume, so at the very least some congestion and the potential for reversal, which we duly see. Now in this case, it's not dramatic, but nevertheless we are moving higher. Some nice little volume lessons here. We can see the market, the stock reverses here, but we have falling volume. So we've got falling price and falling volume. That's anomalous. Why? Because just as in an uptrend, we want to see rising price and rising volume, in a downtrend, we want to see falling price, generally widening spreads as well, along with rising volume. And we're seeing the opposite of that. We are seeing falling volume. Therefore, we can conclude that this is not going to go very far because the spreads have narrowed and the volume is falling away. And on up we go. Now, at this point, the key thing, I think, for any longer-term investment in this stock, two things primarily that I will be looking at in detail. First of all, clearly the fundamentals, because this stock has had a rough ride in terms of the fundamental aspect, and therefore I'll be looking closely at the balance sheet and the cash flow and the income statements and everything else and the P&Ls. So I'll certainly be looking at that very closely. But from a technical perspective, I think the key takeaway here is patience is required, because what we want to see is a move beyond $24, $25, $26, something like that, associated with good volume. Now, the issue that this stock has, certainly in terms of development of a stronger bullish trend, is the mountain of congestion that we have to battle through now that is built up in this region, right the way back up into $50 and the $60 area. So the progress for this stock is likely to be labored unless we get a nice injection from an earnings release we have here, where time will tell. But the key point is that whatever we're looking at in terms of this stock, it is going to be a struggle. This is not going to be a smooth ride higher, purely because of the amount of price resistance that is going to be coming into play at all these different levels, not least at $30, which is going to be significant. So if we break above 25, we should see relatively smooth move up to 30. But then once we start hitting 30 again, we're going to really hit the strong resistance area here and really have to battle our way through this level to break out to the upside. So that's on the monthly. Let's have a look at the week. And really that's just mirrored. Let's just pull that up. And again, you know, my eye is drawn to the anomalies. What am I looking at? And clearly you see this telegraph pole of volume here. We've got a narrow spread candle and a ton of volume coming in. What is that telling you? It's telling you that the market is weak at that point. Yes, it carries on for a little bit higher, but look at the anomaly you get on this candle. You've got a widespread candle, tiny volume. This was the one that really catches the eye there. You've got a big injection of volume going in, a very narrow spread on the candle. So clearly the market makers are struggling. They're selling into weakness at that point. They're getting out of the market. They're just preparing for the next phase of the rally. They're not going to do it instantly. And always remember with VPA that when you see these signals, it doesn't automatically mean the next candle is going to be the candle that is going to confirm, because things take time to develop. Yes, the market makers are selling into weakness here, but they've got more selling into weakness to do in this region before they decide to reverse, and then on we go. And what's interesting about that reversal is Look at the volume associated with it. It's not huge. It's certainly not the amount I would expect to see with that particular candle, or certainly the width of that candle, the spread of that candle. And indeed, that rally doesn't reverse very far. And it's what I would expect because the volume here is not huge. It should be much higher with that spread of price action, and it isn't. So that is telling us, in the same way as we saw in the previous time frame on the monthly, it's anomalous. The volume is out of kilter. It's not in alignment, and therefore we should expect the market at least to congest and possibly reverse what it does, which is what it does indeed in due course as we move into November here. And we're into this congestion phase, which is very clearly defined here. We can see we've got $24, $25, let's say, is the level we'd want to see breached before we'd be a little bit more comfortable in perhaps looking at this as a longer term perspective, a longer term buy. Much of that decision will be wrapped around our fundamental data, as I've already stated, and equally bearing in mind that as we get up to 30, looking at the monthly, there we're running into very heavy price resistance on the monthly chart. Finally drop down onto the daily. Doesn't really tell us anything very much more than we've already seen there. But again, our eye is drawn to this sort of candle where we have narrow spread, big volume, input of volume, followed by what is clearly anomalous. We have a candle here that follows immediately after this one, the day after, double the spread, and yet tiny volume. So it really is giving us a very, very strong signal from an intraday or daily perspective that really this stock is not primed yet. The market makers are not accumulating this in any great way at the moment. We have to be patient. We have to wait. We have to wait for those accumulation phases to develop. We have to be patient, in other words. And patience, let's face it, none of us are very good at it. But when you're looking for longer term opportunities like this, patience is the key word. So as I say, again, it was an interesting start. We covered it in detail and analyzed it in detail in the stock trading and investing program. Again, on this chart, very simple. I've just got the volume indicator on there, but we have all the others, the volume related. We've got the VWAPs. We have a volume relative strength indicator, which looks at the relative nature of volume, which is a fascinating indicator. It gives you great insight into the strength of trends, which is what it's all about. Because when you have a trend, you really want to see momentum in that trend develop strongly, and that's what the VRSI indicator does as well, all included in the stock trading investing program as well, of course. So I hope you've enjoyed this video. Lots more to come with Anna and myself as always. So thanks for watching. See you soon, and bye for now.